Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 2nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had a little bit of economic data today in the form of PCE, which is personal consumption expenditures. The core PCE price index came in at 0.1%, right in line with what was expected. We also had personal spending, which came in at 0.4%, which was a little bit higher than expected of 0.3%. On the flip side of that, we had personal income actually come off a little bit at 0.2% versus 0.3%. So the personal spending is good for the overall economy in the spending aspect, but with incomes a lot lower than expected, that creates a bit of a conundrum, if you will, just because people are making less, spending more, saving less. Not that great. Well, with the interest rates as low as they are, one could see that that's why people are starting to spend rather than to save. So we have that going for us in that regard, I guess. On to the overall markets. As you can see here, crude oil /CL continues its slide now into the 30 handle, just below that $40 a barrel line in the sand that I've talked about. As you can see, I threw up some Fibonacci levels here just to give you an idea as to what's happening here. We were overextended to the upside when we were up into those 50s. I talked about this for what seems forever, that there is just a glut of oil out there, but the market continued to rally. Now the overall market is continuing to see this glut of oil out there and not a whole lot of usage. So the market has pulled back and below that $40 line in the sand. Now that we're below that Fibonacci and psychological level, I'm looking at this to at least go down and touch the value area low, which is this area right here, right around the $37 a barrel area. In the Fibonacci level, we could easily see it extend down to that 35, mid $30 a barrel area. So you guys knew I was short oil, covered it probably a little bit too early when we got down to around that value area or the point of control. Now I've decided to add a little bit more for a quick trade to see if it goes down to this 37 mark. So I'll talk about that here in a little bit, but on to the broader markets. Gold /GC pushing higher, looking to want to test these highs that we saw at 1377 right there, just shy of that by about $5 at 1372. So we could easily see that happening, especially with the pullback that we're seeing in the equities. Bonds still negative on the day by over 1.5 points, but have taken back at least half of the losses that we saw earlier on today. This was basically flipping as soon as the equities started losing ground, that the bonds started coming back. On to the equities, as you can see here, the NASDAQ /NQ, the E-mini NASDAQ, down over 40 points right now, almost 42 points. But off the lows of the day, this is what I've been talking about. We made historical highs yesterday on bad economic data. People looking at the Fed probably thinking, hey, you know what, it's going to still be free money for a little bit longer, and pushed it a little bit higher. The euphoria looks like it has started to wane a little bit. Onto the E-mini S&Ps /ES, and I talked about this where it looked like the rubber band was getting round really tight. We just had this back and forth, who is going to win this battle of the bulls and the bears up here at historical highs. It looks like the bears are starting to win. The bulls look like they kind of are looking to start taking some profit, and we could start seeing this rubber band unwind rather quickly and at least come back down to the point of control here, which is what I expect to see happening. Hopefully we can get that, because for me, I'd like to see a little bit higher implied volatility come into the market. The VIX is at historical low, or at the lows we've seen several times throughout history, but just at the bare bones low that you can basically get to for the volatility indexes, and we'd like to see that pop up. You usually see that towards the end of August, maybe into July, so we could be starting to see that cycle happening a little bit earlier. This is the breakdown of the E-mini S&Ps on a 15-minute chart, daily chart, down over 16 points right now, and this was where the economic data started coming out here in the United States, and the overall market just really started free falling along with oil. Oil was was trading in positive for the better part of the morning and overnight, but then the equities started sliding, gold started rallying, and crude oil started falling. So everything just kind of switched. Somebody flipped the switch and everything started being a flight to quality in a sense. Onto the trades that I've done. I tweeted these out. These are the earnings trades I did. I tweeted these out on my Twitter handle at Wolfman's blog. So I talk about this, that late in the day is when I put on these earnings trades. Follow me on Twitter so that you can find out what I'm doing. And I tweeted these out late in the day. You kind of have to know what my rules are around it, but I tweeted out that I was getting short some puts in Procter & Gamble, ticker symbol PG. And I did the August weeklies with only a couple of days to go and sold the 84.5 puts for 42 cents, bought them back for 4 cents. It does have low volatility, but I have also talked about the volatility crush and how you can determine how much crush you're going to see out of these particular underlyings. Doesn't seem like it was very high implied volatility, but there's a way to determine what the volatility will be after the binary event. And I talk about that in my volatility crush course. So check that out at Pro Trader Strategies so you can find out more about that. We're starting to wind down to the end of the earnings season, but there's still time to get this strategy and this course, learn about it a little bit, and start implementing some of these earnings trades. On to the next trade was CVS Health Corporation. This one went outside the market maker move, which is a rare occurrence. As you can see, it was up $4 on the day. I think the market maker move on that was about $2.50. And I ended up doing a strangle. I was really sure which direction this was going to go. Did the August 96.5 strangle. Sold it for 74 cents. Now, as you can see here, we're about $1 above my short calls there. It has gone back and forth. It's tested that $97 strike a couple of times. I'm looking for it to come back there and come back down to this point of control. Looking to cover this one. I made good money on my Procter & Gamble. Might be using that to offset the losses in CVS. But again, I'm going to be playing this as we go. I might just roll this out in time, give myself a little bit more credit, and give myself some duration in order to be right on this one. So in the August 96.5 strangle, I covered the August 91 puts because they were almost worthless for 3 cents. So now all I have on are the naked short 96.5 calls. So if I can get that down around $97, if we can get this trade back down there to $97, that's going to be right around where my break even is on this earnings trade for the overall day. 96.5 plus the 71 cents makes my break even just above $97. So that's where I'm looking at to get out of this one. If I can get it down to closer to 97 even. We have gotten the volatility crush, so that's helping me out. A little bit more theta decay over the next couple of days, and that will make that work out rather well for me. That's about all I've done today. Friday's webinar is going to be on the short put butterfly, so check that one out. This is a great strategy for the type of situation that we've seen in the SPOOs, where we've gotten that flat line and we're looking for that to kind of unwind rather quickly. So that will be a good one. I forgot about one other thing. The XOP, I put this trade on yesterday. As soon as we broke below that $40 barrel area, look to participate in some of that on the downside. Like I said, I think it's going to actually go down and test 37 handle in the /CL, which kind of coincides with around the 31 handle, at least in XOP. So I bought some puts in there, and the reason being I bought puts in there is because the volatility is just so low right now that I went into the September, give myself a little bit of time for this to work out, bought the 31 puts for $1.06. So that was a debit spread. It's a winner today. It wasn't looking too good earlier this morning, but now we've seen this fall off in crude oil, and looking for it to trade down to that at least $31 area, and hopefully come down and test this the 30 handle in XOP, which is the next volume node. So that should be acting as a bit of a support there. All right. That's all I got for you guys today. Like I said, check out Friday's webinar by going to protraderstrategies.com. More importantly, check out that volatility crush course, because that is huge. It is top of mind for anybody in trading, especially on the floor. Like I said, that was something that on the floor we would meet in the morning and meet in the afternoon and talk only about volatility. It wasn't about very much else. So that is hugely important if you want to understand how to trade options. All right? If you can't take that, take it easy.